How do you think about an investment where, in the stroke of a pen, China could come and change the rules of the game?
You know, I think China is a market that we are long-term committed to, but we've been really focused in the Chinese market. We're only investing in healthcare, AI, and enterprise software, and these are market segments that the Chinese government has been very supportive of having foreign direct investment, and we don't see that changing anytime soon. So we are still very long-term committed to China.
In the short term, though, what does that mean?
I think that you have to be careful about areas that are going to be heavily regulated. So areas where there's a lot of consumer data, where there's national security interests, I think those are areas that we tend to avoid everywhere. We think that as a global investment firm, that those are investments better left to local investors. And we're focused on cross-border investments where we think that we could be much more help to these companies.
Interesting. I think in the past we've talked to you, and it could be as much as 40%, at least within the global fund that's allocated to China. Is that still a commitment? I know you've talked a lot about the long term, but how do you view that commitment into next year of 2022?
You know, I think we're going to increase our investments in China. We're not quite 40% China, but we do invest heavily in China. But we invest in Asia broadly. We will continue to increase our investments in India and Indonesia, which we think are two big growing markets. And those are markets that have actually really benefited from some of the geopolitical issues between the US and China. And we still continue to invest more than half of our funds in the US, where we still see significant opportunity.
I want to get to the U.S., but in a minute. It was interesting that you mentioned some other beneficiaries, perhaps maybe to the fallout that we've seen in China. Look, and you have locations in Bangalore, Jakarta, I mean, you name it. How much of this allocation on a global basis is also EM or global ex-China?
EM's a big part of what we do. And frankly, in places like Southeast Asia, India is a market I think that all of us who've been investing globally have been long on for a long time, but it's taken a while to see the IPOs and exits. We're starting to see that now. That's exciting. And I think Indonesia is one of the youngest, most vibrant economies. We've been investing there for many years. We just made our first investment in Vietnam. We're investing in the Philippines. These are all markets that have really benefited from some of the prior discussion that you've been having.
So you've talked a lot about, EM and China, you name it. Let's bring it back to the U.S. because you still said a majority of your focus, of course, continues to be here. It was interesting. We were having a conversation in an earlier segment about how SPACs were going to be the new outperformers next year relative to traditional IPOs. How are you viewing good exit strategies for some of these companies that you're looking at? Are SPACs in the running?
I think SPACs are definitely in the running. They're not in the running the way that they were earlier this year. I think the SPAC market has not just cooled off. I think it went really cold for the second half this year. But I think SPACs will come back. Most of our companies, majority of our companies, exit through traditional IPOs or through acquisitions. SPACs are a small part of our exits, but we think they're an important part. And in the right conditions, taking a SPAC can be great. But you got to remember that once you SPAC your company, you're now a public company and you have to deal with all the ups and downs of being public.
Yes, we certainly see that, which is why some companies, I think, are choosing to stay private, maybe for longer. Talk to us then about the investments in the U.S., because a big theme has been so much capital chasing too few investments, and then the heightened valuations you continue to see. How do valuations look to you right now with all of this capital flooding the private markets?
There's a lot of capital, but just to put it into perspective, venture capital, growth capital, what we do, we're still only about 1% of the global asset management landscape. And so we actually, interestingly enough, we think that there's a lot of headroom and that quite possibly we'll be sitting here in 2030 talking about how valuations in 2021 were quite low. And a lot of this is the shift of exactly what you mentioned, companies staying private longer. It used to be a lot of these rounds were being raised in public markets, and now they've moved to the private markets. And if you look at it in that context, I think we still have a lot of room to go in tech. And in many of the industries we invest, healthcare, banking, insurance, we're just getting started on this digitization journey.
Where do you see then within tech the best opportunities at this moment?
You know, we're firmly focused that this next decade is going to really be about three things: healthcare, biotech, bringing drugs to market faster, number one, Number two, financial technology, financial inclusion globally, both in the US and outside the US. And third is climate technology. We think that this is an increasingly important area for all of us as investors to be focused on. We have to make a return, but I think that there will be great investments in these areas. But these are markets that you really have to understand the markets. And one of the things that we've done is we've had a global partnership with BCG, who works with a lot of the traditional market leaders, and building those partnerships between their clients and with the companies that we're investing in has been a key part of the bridge for us.